This is Matthew Cratter from Trade University, and today I want to answer the question, is Bitcoin too volatile? In the last couple of days, we've been talking about this saying of seeing things with Bitcoin eyes and what exactly that means versus seeing things with your fiat or your regular money eyes. When people look at Bitcoin, some people see a really high risk, volatile asset, but Bitcoiners see a low risk store of value. And this is one of those paradoxes, and it's one of the reasons that people have trouble coming to Bitcoin. And often they will be looking at the exact same thing, but they'll be seeing two different things. So I want to talk about Bitcoin's volatility, why it's there, and how you should understand it, and how understanding it's going to make you a better long-term hodler. So it's important to note that new tech always begins in a volatile way. If we look at all the internet stocks, all the modern tech stocks, things like Amazon, Apple, Microsoft, I could have listed Tesla, Netflix, all these different stocks here. They all began their lives, and many of them continue their lives as highly volatile stocks. Even Amazon, this huge juggernaut, has had many, many large drawdowns, including one back in the early 2000s that was a 93% drawdown. So even something like this, which was much easier to understand than Bitcoin, was extremely volatile. If you're finding this video helpful so far, be sure to hit that subscribe and like button. It would really help out the channel. And yet, the thing is, even though we know that internet stocks and software stocks and biotech stocks have been volatile, somehow economists and people who dislike Bitcoin expect an entirely new form of money to emerge on the world stage, fully formed, smoothly, and without any volatility. And I think this is an unfair double standard. As we said, internet stocks are volatile, biotech stocks are volatile, new tech is always volatile, and adoption is never a smooth, straight line up. Historically, especially when there were many early automobile stocks, many early airline stocks, these were extremely volatile as well. We can add to this that Bitcoin is also the most free market that we've ever seen, or that we've certainly seen in the last 50 years. It's an asset that trades globally, 24/7, trades on the weekends, trades during the evenings, and it's not limited to a single exchange like many different stocks. There are no circuit breakers, there's no pausing trading, there's no lock limit down. If a certain exchange goes down, it will still be traded on other exchanges. And I have to emphasize, of course, there's no Fed intervention, there's no Treasury intervention printing out more supply, and there are no government bailouts with Bitcoin. So it is this very free market, but it's actually more interesting than that. And if we look at Bitcoin with Bitcoin eyes, we're going to see where this volatility also comes from. So one of the things, or perhaps the thing that makes Bitcoin so potentially valuable, and most people know this, is its scarcity, this 21 million maximum supply. There will only be 21 million Bitcoin. And in fact, there'll be fewer than these because many of them have been lost. There'll probably only be 15, 16, 17 million coins. So it's a very scarce asset, and it has true scarcity. It's not fake or temporary scarcity like a lot of altcoins, like Ethereum, for example, because Bitcoin's scarcity and its future money issuance schedule and rate, they're believable because there's no one in charge. And so no one can capriciously come in and change things. Unlike Ethereum, for example, which changes its monetary policy every few years. It decides to burn miner rewards. The future supply of Ethereum is very unclear because you can always have a hard fork. It's always doing hard forks, and no one really knows what the future supply of Ethereum will be, simply because they're oligarchs in charge, and we will see what they decide to do. But Bitcoin, we know what its future monetary policy is, and we know that this future monetary policy, this future rate of issuance of new Bitcoins is very real because Bitcoin is decentralized, and so this ensures that the scarcity is real. So for example, when you have fiat money like US dollars or euros or yen, that scarcity depends on your central bank and on your treasury being trustworthy. With Bitcoin, you don't have to trust anyone because there's no there. There's no sender, there's no Vitalik, there's no Hoskinson, there's no Jerome Powell. So this is true scarcity, 21 million coins enforced by this decentralization. Maximum supply of 21 million coins. What this means, another way of saying this, the economist way of saying this, is that the supply of Bitcoin is inelastic. Now, what are some examples of an elastic supply? For example, the price of corn. Let's assume the price of corn goes up a lot. What this means is farmers are going to start planting a lot of extra corn. Maybe they'll switch from wheat to corn in their fields. Maybe they'll open up old fallow fields and plant corn. They'll plant corn on the sides of their house. They'll plant corn in their driveways if the price of corn makes it worth it. And so when this happens, corn supplies naturally increase because more of it's being planted. And then these higher supplies helped to keep a cap on corn prices and to eventually bring them back down. And so you have this interplay between demand and supply. And the price signals are what signal to producers to produce more of the commodity. So that's an example of a commodity that has a very elastic supply, corn. Bitcoin has a very, very inelastic supply. This is because higher Bitcoin prices do not and cannot increase the amount of Bitcoin that is being mined. So it doesn't matter where Bitcoin is trading, the next block will issue 6.25 new Bitcoin. This is the miner subsidy. And in a couple of years from now, this is going to be halved to 3 and something Bitcoin, and then it will be halved again 4 years after that. And so we know the issuance rate, and we also know that there are only going to be this amount of Bitcoin issued per block. It doesn't matter where Bitcoin prices are. So Bitcoin basically has a price elasticity of supply of 0. That's the way economists would say it. If demand for corn goes up, you can always make more corn. If demand for Bitcoin goes up, as indicated by a higher price, you cannot make more Bitcoin. It's impossible because of this max supply. The Bitcoin supply is fixed, but Bitcoin demand is highly variable, and it depends on lots of different factors, macro factors like Fed money printing, interest rates, Bitcoin adoption and usage. Bitcoin adoption and usage is more of a slow-moving thing. Macro factors can be much more volatile and capricious. They can temporarily hold down the price of Bitcoin, but they can't change its long-term value. So you have this weird confluence of supply and demand where the supply cannot adjust to higher prices, but the demand is highly variable. And so as this demand for Bitcoin moves all over the place, Bitcoin's price has huge price swings. And this is because its supply cannot adjust to demand. If it were corn, you could plant more of it, but because it's Bitcoin, you cannot plant more of it. But this is actually a good thing. So if you look at it with Bitcoin eyes, you see that this is a good thing, that its supply cannot adjust, because this is what makes it scarce. This is what gives Bitcoin its real value. I'll link here to a wiki article on the price elasticity of supply, so you can read more about that. But this is what's so interesting about seeing with Bitcoin eyes. If you look at Bitcoin with fiat eyes, you see something that's just too volatile, that's uninvestable. A lot of people have said this. Of course, they said the same thing about Amazon and Tesla and some of the other stocks, that they're just too volatile. Of course, if something's volatile, you could also change the weighting in its portfolio. In your portfolio, you can make it a smaller weighting, and so the overall volatility will adjust. But the bigger point here is this paradox that if you look at Bitcoin with fiat eyes, you see something that's too volatile. But if you look at it with the eyes that understand Bitcoin, you realize and understand that Bitcoin has to be volatile and must be volatile if it is going to be truly scarce. If it cannot adjust its supply, that means it's actually credibly scarce. Right now, Bitcoin currently secures about $426 billion worth of value. If you look at the larger traditional asset markets out there, stock markets and bond markets, fixed income, real estate markets, all of these are in the $100 trillion range, especially if you look globally. So Bitcoin is this tiny, tiny little tide pool that just contains 426 billion. Equities, bonds, traditional finance, TradFi is the ocean. And the oceans move in and out of this tide pool. It creates a lot of volatility. So part of the reason for Bitcoin's volatility, in addition to its scarcity, is just that it's still a very small market in terms of market cap compared to traditional markets. But as Bitcoin's market cap grows, as it becomes larger, the volatility will become less, in the same way that if a tide pool becomes as big as a lake or as big as a small ocean, the ocean moving in and out of it will have less of a volatile effect. People always wonder and question, will Bitcoin's market cap be able to continue to grow with Bitcoin being so scary and so volatile? Of course it will, simply because Bitcoin, we've seen it happen. We've already seen it happen. Bitcoin has been extremely volatile for the past 12 years, and yet this has not hindered adoption. Paradoxically, it's actually helped diamond hand adoption because the only people left holding it are very, very strong people who can weather the volatility. Bitcoin does not have any fair weather friends because they all get wiped out during the bear markets. So Bitcoin, in spite of its volatility, or maybe because of its volatility, which has been caused by its scarcity, Bitcoin has been able to go from being valued at a zero market cap to a market cap of 426 billion. I think this was the hardest part. As Peter Thiel likes to say, it's going from 0 to 1. That's the real leap and the really difficult thing. Going from 1 to 100 or beyond, in other words, going from $426 billion market cap to beyond, is really much easier. The real miracle is that Bitcoin was able to survive and thrive and grow during its early years. This is not just a hypothesis because we've actually seen Bitcoin's volatility go down over time. We can see back in 2012 and 2013 and 2014, it was much more volatile than it is now. We have had volatility spikes, for example, the beginning of the pandemic when there was volatility in the traditional markets. But overall, we can see that Bitcoin volatility has come down as its market cap has increased. And this will continue. And when you reach the point of much more adoption, when you have 1 to 2 billion people using Bitcoin, it'll move from being a store of value in addition to being a medium of exchange. As the volatility goes down, it becomes much more appropriate to use as a medium of exchange. And the people who expect Bitcoin to just go straight there and become a medium of exchange don't understand what the foundation of Bitcoin is and how important this scarcity is. Because the real function of money is not to send money, but to hold it. And there's always someone, when you send money, there's always someone left holding it. And this is what Bitcoin does very well. It secures that value in a very scarce and decentralized way. And so it's very important to get that store of value piece fixed and perfect before you move on to things like unit of account and medium of exchange. But I have no doubt that we will get there. Bitcoin is obviously being used already as a medium of exchange especially in South America and Central America and places like El Salvador and Africa. It's obviously being used as a medium of exchange on the Lightning Network. It's being used as a medium of exchange in developed countries like the US and in the EU as well to buy and sell things, but it hasn't reached that maximum level of adoption. But it is surely coming as Bitcoin volatility subsides. If you found this video helpful and you enjoy my teaching style, I'd encourage you to check out my paid course, The Ultimate Guide to Bitcoin. So if you've reached that point where you've really begun to hodl Bitcoin, you've watched all my free videos on YouTube, and you're interested in sort of next level stuff like CoinJoin, how to buy Bitcoin anonymously. I have 5 lectures on that, how to build your own multi-sig vault. And then most recently, I made a video about how to turn your iPhone, for example, into a multi-sig vault as one of the most secure ways of storing your Bitcoin. So once you've exhausted the free resources on YouTube that I provide, definitely check out these next level resources. These are a little bit more complicated. They're for the dedicated hodler, but I think you'll find them very useful in your hodling journey, especially understanding how to store your Bitcoin securely so you don't have to rely on third-party custodians like Coinbase or, heaven forbid, a company like Celsius. So if you're interested in this, I'll put a link in the description notes below. You can check out the curriculum, the list of lectures, and also put a coupon code that you can use there. So just look in the description notes right below this video. Sometimes it's a little hard to find it now for a lot of people, but if you go right under the title here, there's a link. You can just click open description, and that will take you, in addition to taking you to all the links that I refer to in this video. At the top, you'll see a link to, I actually don't have it in this one, but you'll see a link to my the paid course where you can check out the curriculum. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.